everyone, Alex Hong here from Traders Corner, and I'd like to welcome you to your weekly Forex video report. In this video, we're going to look over all of the major currency pairs. We're going to analyze the charts, look at the opportunities it can be setting up, some of the key levels, and basically just look to see what you can do with the pairs for the week to come. Now, as always, please remember that this is only for educational purposes only. This is not investment advice in any way whatsoever. If you like any of the opportunities that you do see during this video, you still have to go away and do your own due diligence and make your own decision as to whether you want to take the opportunity, as to whether you want to act on the trade. You can't take what we say as an entry signal in any way whatsoever, because we're not authorized or regulated to give out investment advice. Okay, so now that we've got that out of the way, let's start by taking a look at the euro dollar. Now, what we do is we always start off by looking at the higher time frames. Once we've analyzed what's going on the higher time frames, we can then drill down to some of the lower time frames to look to see where you can act on the opportunities that the higher time frames are producing for you. So starting with the weekly chart, the euro dollar, taking a look at this here, you can see that ultimately we're at quite a big level here. Okay, so the market dropped through this initial low here. Okay, so we had a structure level over there, the 12985. Which also acted as support over here back in the towards the middle of September of last year. Market then broke through it, it's come back to it, and it's broke through it again. And now, since it broke through that, it didn't manage to get through there with any significant momentum, which is what we like to see, and that might have something to do with this level here. So going into next week, we either want to see the market pop back up above this level at the 12985, or break down below the 12872 level. But until it does any of that, really and truly, the longer term trades are going to be off the table. You might be able to scalp some volatility in between these sorts of ranges here, but for a longer term, to jump on board with the longer term trend, we really need to see what's going to happen with regards to this level here. I mean, looking from this perspective here, you can see that we had a structural break over here. So the market is in a technical uptrend from the weeklies perspective. We are bouncing off of a pretty major level over here. Look at the last time the market got down to this level back in the January 2000 level, so it's quite a while back. And then we can see that it's also treated that level as support there back in the past as well. And I'm sure if we go further back, we'll be able to see other instances of this level coming into play. So the 12850 level is quite a significant level for us. Now, from a weekly perspective, there's not a lot we can do here. However, if we jump along to the daily, we can see that there may be a few other opportunities for us. Obviously, we can look to take a break above this and trade it up towards sort of like the 131.66 level, or we can look to take a bounce from this level here that it's trading at currently, which is a previous level of support. So the market broke up above there, treated it as support. It since then went and rallied off, and it's jumped all the way back without giving us much of a thought to give us a bit of a relief rally or something like that. So ultimately, looking at this here from my perspective, on the daily chart, you can see clearly where you'd want to be trading from. So you'd want to be trading above here up until this sort of level, or below here down to this sort of level here. But as far as an entry is concerned, I can't really see anything in terms of an entry on here. So what you'd probably want to do is jump down to the lower time frame, so looking at the 240 over here, the 4-hour chart, and look for some sort of a price action reversal around here. So you can see we've got sort of like a doji over here. We've got quite a bullish bar going up to this level here. You got a doji at that level, so if we get a breakdown from this level here around the 12950-ish, then you could look to maybe possibly trade that back down to the 12849 level. But having said that, if there are other opportunities out there at the moment, it's not completely clear for me. You know, if you put a gun to my head, they would be the sorts of trades I would look to take. Having said that, none of the trades that we can see here really present a significantly, a high probability trade. Looking at the daily chart, so if we kind of zoom out here, zooming in, we can see that we are at quite a big level there. So you could, the problem is you can argue both ways. You can see that you're at this major level of support here, which is support there again, and then is now becoming resistance. So you could argue that really and truly, if we had to pick any sort of a trade, we've got to be looking to take that that sort of short from here. And if we were to do that, you'd be taking that short from off of like the 4 hour, or maybe look for a 1, 2, 3 reversal on the 1 hour chart or something like that. However, having said that, even though that is a large level on the daily, look at the level that we're trading from on the weekly, and that's this level over here at the 12863. So we're also bouncing off of that level, which is why I say, really and truly, from a longer term perspective, I'm expecting a little bit of a bounce to the upside here, at least an attempt to come and take out these highs here, if not the highs up here. But from a shorter term perspective, there isn't anything that jumps out at me and really screams to me and says, this is an opportunity you have to take. So that's that for the euro dollar. Looking at the pound dollar now, we've got the opportunities we've got on the pound dollar are a little bit more compelling. So if we look at the pound dollar chart now, obviously the 1 hour chart isn't telling us all that much. You can see this is kind of, well, it's disgusting price action. There's nothing for you to see here. However, what is interesting is looking at things like the weekly chart, starting from the higher time frame. Look at this, a massive level of support that the market managed to break through a few weeks ago below the 125248 level. It broke through that level. It did give us a bounce up, but it's bounced off of a level that we would expect it to bounce from. You've got this level over here, previous level of support. Previously, when the market got down to that level, it did give us a bit of a rally. We've got another rally here again. Now look at what happened the last time the market rallied from this level. It then got up to these sorts of levels that we're at now and crashed through and broke down towards the 142s level. The stuff in the UK is obviously far from positive, so fundamentally we've still got a lot of negativity there. We're at a great level now to look for a short. So we've got this previous support once, twice, 3 times, 4, 5, massive level of support. The market broke through there a few weeks ago and has since rallied back to it. Now from the weekly perspective, maybe we wouldn't be able to see an opportunity here, but certainly from the daily or the 4 hour perspective, from the daily perspective, I'd be looking for some sort of a pin bar at this level here, some sort of a hammer shooting star, a candlestick reversal pattern at this particular level here on the daily, and I'd be looking to take that short on a break below the low of that signal bar there if we were to get it. If we look at the 4 hour bar, I wouldn't really be looking for such a candlestick formation pattern. Really, I'd be looking for a 1, 2, 3 reversal. So I'd look for the market to come up here, create this high here, drop back down, come back up, test the highs, not get below the highs, and then break through that level there, and I'd be looking to take that short. That would represent quite a high probability opportunity for me. So if we're looking at the euro dollar and the pound dollar, for me, you'd have to say that the pound dollar is trading from a massive level. It's a fantastic level to take a trade from. If we can just get the price action from this level here, I'm going to be all over that and looking to take that short. But it really is about what we get at those levels. Remember, we can't predict what happens here. We don't have a crystal ball as traders. All we can do is we can react. So we can anticipate price reacting to these levels, but we only act on it when it proves itself to us. So when the price proves that it wants to reject this level and it wants to break down from here, then we look to take the short. We don't just jump on and start shorting here because the market's at that level. I know there are people that do that, and I'm not knocking them. That's probably a very successful way of trading. But for us, we like to trade when we get a reaction to the level, when the price proves to us that it's respecting the level. That just gives a little bit more weight to those trades. And yes, sometimes it means you'll be in a little late to the trades. But you know what, we as conservative traders, I'd rather be in a little bit late but have a higher strike rate than find that I'm just chasing trades everywhere and getting stopped out here and there just to get the one big winner. But that's just me. Obviously you need to make your own decisions on that. Looking at the Aussie dollar now, if we jump across to the Aussie now, this eventually, when it goes through to us, this also is providing a few opportunities for us. They aren't as clear cut as the pound dollar. But what I can say to you is that we do have some levels that we can look to trade from. So if we first start from the weekly, we can see that really and truly the market is in a sort of consolidation phase. It's not trending by any means. So it's bounced off of this level over here at the 10150 level, which was a previous level of resistance going back to 2010 there. The market's since used it to pivot from on a few occasions. It's come back to that level back there in October 2012. gone up to those highs there, come back to that level, it's reacted to that level there, and I'd fully expect the price to at least try to push towards the highs, hit 106.31 before it makes another attempt to get short here and break through these levels. Now, how can we trade that though? Well, from a daily perspective, I can't see much, to be honest with you. From a daily perspective, it looks like it is just bouncing up and down with these levels, which is fine. But from an opportunity perspective, I can't see a way to get in there. So what we need to do is jump down to the 4 hour. And from the 4 hour perspective, you can see that you've got a few things that you can do here. There are a few plays. First of all, you could look to take a break of the high here. Okay. So if it gets through 10459, you can look to take that to the long side, looking to take profit off it somewhere around 10666. However, what I would prefer to happen is I'd prefer the price to come back down to this level again. Okay, so we're looking for it to come down to the 10416 level. Over here, you can maybe see it on the 1 hour a little better. So come down to this level here, previous level of resistance, which if it can come down to this level, it can treat it as support, and then give us maybe like a 1, 2, 3 reversal pattern or something like that, which means that we're getting in at a little bit of a discount. I don't like buying highs. That's just me. So if we can get the price to come back down to this level and then give us some price action, I'd be quite happy to take a bounce from that level there. And then the first levels I'm going to be looking at once we're in the trade is obviously, as I said, the 106.30 level. If it gets through that level, then you can be looking at highs up towards the 108.50 level, but that's still a little way off yet. We need to see the market get up to this level here and see how it responds when it gets to that level. Then obviously we can make our decision based on that. The dollar yen is a little bit difficult. The dollar yen has been rallying for months now. It hasn't really given much of a pullback, so we would fully anticipate we wouldn't be surprised rather if we got a little bit more of a pullback now towards the sort of 90 level before it made its attempt at going further up towards the highs. However, I would expect that to be the case if we get a negative reaction to the new BOJ governor coming in next week or the week after, I think it is, somewhere around the 3rd of April. If he doesn't act as the markets expect, then we could probably see the yen dip quite significantly, because all of this is on the back of the fact that they had the new government come in back in a few months back. They are very, very clear on the fact that a weak yen is beneficial to their economy. Remember that Japan's an export-driven economy, so if they have a strong yen, it affects their exports. Last year, they went from a trade surplus to a trade deficit. So ultimately, the government that are coming in are looking to stimulate the economy with pretty much any means necessary. Now, the BOJ governor that just went out wasn't necessarily, well, it's not they didn't toe the party line, so to speak, but they just believe that the new BOJ governor coming in is going to be much more aligned with the current government. Now, if that governor that comes in doesn't toe the party line, doesn't react and act as the markets expect, then we could see the market dip back. And as I said, you wouldn't be surprised if it dipped back towards the sort of the 90 level, at which point we would then look for opportunities to start buying again. But at the moment, it's quite difficult to look for an opportunity in this pair because it's so extended. Yes, you could probably look to take the bounces off of the 1 hour chart. So looking for short-term volatility. So trade from 94.21 back up to sort of like the 96s. That's a completely sort of, that would be a valid strategy for you. Though I wouldn't see much wrong with that. But if you're looking for the clear-cut ones, if you're looking for the big ones where the trends are going to continue, really and truly, I would like to see a little bit more of a pullback than we have right now. We are very much overextended. You can see the market run up that it's had there since sort of October, November time. It's gone from 77 up to 95, and it really hasn't looked back once. So as I said, if we can get a little bit more of a pullback somewhere towards that sort of level there, we don't want it to be too aggressive, mind you. Okay, so an orderly pullback to that level there, that would signify a good buying opportunity. But at the moment, as I said, apart from trading the shorter term volatility, I can't see much on the table here in terms of an opportunity to trade. Looking at the dollar franc, this is quite interesting because if we take a look at all of the charts, if we look at the weekly chart, you got sort of like a head and shoulders forming here. So you got the shoulders here, you got the head, shoulders, some sort of a neckline coming up here. I mean, the neckline would have been more up here, but I just prefer trading through horizontal support and resistance levels. So the market's at a level that it's paying attention to. Okay, you know that the dollar franc pays attention to its levels. It's done it for years and years and years. You can see the market's bounced off of this level here, treats it as support, comes back to it, treats it as resistance, comes back to it, treats it as resistance. So where are we now? We're at a previous level of support, which the market treated as resistance, broke through it, came down, come back to it again, and it's treating it as resistance again. Now, how would you play this? Well, from my perspective, you're either looking for a break below that level there. So on the daily chart, I would really wait for the 93.77 to be taken out. And then you'd look for the first support areas around the 92.15. And then you'd be looking at the 90.83 and the 90.00. 4-hour chart is pretty much exactly the same sort of trade. What you've got going on here is sort of like a 1, 2, 3 reversal as well. So you've got the 0.1 here, 0.2, 3. It's come up to try and make a higher high. It hasn't managed to do that. If it breaks through that level there, then you could be looking to take that short with either a stop above here if you're quite conservative, or a stop above here around the 94 level. So again, another interesting opportunity. So far we've got the pound dollar, Aussie, and the dollar franc presenting us with opportunities. The pound dollar is by far the most compelling. It's the one that makes the most sense, but the other ones also, they're pretty good levels to be taking trades from. Looking at the dollar CAD now, for me, I can't see much. This is an ugly chart at the best of times, and I just couldn't give you a trade here if my life depended on it. There's really not a lot that I like here. There aren't any major levels to take any trades from, so for that reason, we will leave that. And then finally, looking at the New Zealand dollar, which is pretty much just about as bad as the dollar franc. I mean, if you take a look at this here, we are in big time consolidation. It's moving sideways. You look at the daily chart for a little bit more clarity, also moving sideways. Any opportunities on the 4-hour chart? No, that's moving sideways as well. So that pretty much wraps up our video for today. I hope you've enjoyed the video. I hope you've got some good ideas from it. As I said to you, it's for educational purposes only. We're teaching you how to read a chart, how to look at identifying the opportunities, and all of that kind of good stuff. It's not investment advice in any way whatsoever. We're not telling you to take trades here. If you like some of the opportunities that we've highlighted in this video, you still need to go away and do your own due diligence, okay? But I hope you've enjoyed it. If you have any questions, please feel free to post it in the comments box below. Otherwise, I look forward to speaking to you all next week. Take care now and have a good week trading. Alex Ong, Traders Corner, signing out.